We are off and running. So, all right. Well, good morning, everybody. How's everyone doing? Welcome to fall semester, and we're going to start with going over some of the details as to what this course is about. So, this is Intermediate Accounting 1, and we're going to talk a lot about financial accounting rules and procedures and policies and methods, and that's really what we're going to be doing in this course right here. So, I'll talk about the syllabus and what I want to do. I mean, obviously, I'm sorry we're off to the late start. I really am. I was trying to figure out how to print off a class roster, and for whatever reason, our geniuses in our IT department couldn't tell us that they were changing the menus around. I spent 10 minutes trying to figure out how to print off a roster, and I couldn't do it. So I'm not a very happy camper at the moment. But anyway. So all right. So we're going to talk about this course. We're going to talk about what's expected, what we're looking at here, and this is an interesting course. When I think of intermediate accounting, what my perception is, it's the entry point to the profession. It really is. Almost nobody takes this course who's really not interested in studying accounting or practicing as an accountant somewhere, whether as a CPA or as an auditor. Well, CPA could be an auditor, or as a tax preparer or something like that. And this is really the entry point for all of that that we're looking to do. So, and we're going to cover a lot of rules and whatnot in this course. This is a challenging course. I will tell you this. I took this myself. I'm kind of an older person. I took it way back in the day, and it was presented to us in two 8-week segments, Intermediate 1, Intermediate 2, and it was made very clear to us that they were trying to get rid of people. We do not take that position here. I will say, though, it's a challenging course, and you're going to have to do a lot of reading, a lot of studying, and but if you like accounting, like me, if you like accounting, it's going to be good. It's going to be fun, but it's going to require work on the part of everybody who engages in this course. There's just really no other way around it. One of the things that I've long said about accounting is it's got to be more or less learned. I mean, we can teach, I've been doing this for a long time. We can teach accounting, but it's really got to be learned, and you really got to kind of study it, and you got to kind of read the material. You got to kind of do problems. You got to do problems and problems and problems and problems over and over again, and that's the way you get better, and that's the way you get this sort of muscle memory that sort of allows you to do better. So anyway, so that's sort of what this course is about. It's really the entry point to the profession. So let me take a little bit of time here. I'm going to talk a bit about the course itself, and I'll go through the syllabus. And this is an Attend Anywhere section. And when we talk about Attend Anywhere, we have 3 different modalities by which you can attend. You can be here physically, which is nice. I love seeing all the people here. And I've taught a number of Attend Anywhere sections. You can either physically attend, or you can watch it live on Zoom, which we're live right now on Zoom. So if you're, and I don't know if we have anybody on the live Zoom link right now, but let me check here. But because they are more than able to, I don't think we have anybody on the. Doesn't look like it on the slide, which is fine. It's fine. It really is fine. And so you can take it on the live Zoom link, or you can come to class, or you can watch it in the recorded version. I'm going to post this particular lecture, as all lectures, a little bit later in the day. It takes a little bit of time. What I do is I go back to my office and I'll sort of compress it to an MP4 file, and then we upload it to YouTube. Since it's a YouTube accessible file, and there's no password or anything. I have a YouTube channel. I have it for a long time. Nothing terribly exciting on it, other than mostly accounting lectures, and so you can access it. And the good news about that is, obviously, we all know, we've all been on YouTube. You can stop, start, rewind, all that. It's kind of a good thing. It really is. Particularly in an area which is sort of complex, like intermediate accounting, where we're going to be sort of jumping in and out of topics that are going to be rather complex over time. So that's really what's going on there with regard to that. So Attend Anywhere, personally, I think, and I've said this for a long time, I think it's sort of the way of the future, because it sort of gives students really 3 different ways to come to class. Now, I've taught a number of Attend Anywhere sections where nobody has showed up ever. That's fine. That's their choice. And I know that I think our student body is sort of moving more toward wanting to not step foot on campus, which is okay. That's fine. And some which we've had a lot of attendance. and I really like this attendance here. So, or you can watch it at some point in the in the near future on a recorded video, and it's always going to be there. It's going to be there for you to look at. So that's a good thing. So personally, I'm really high on the attend anywhere modality. So let's talk about the syllabus. We don't print syllabi by off anymore, so you can just sort of print them, save them for whatever you like. So this is intermediate 1, okay, and we have two different sections, AO1 and AO2. It doesn't really matter which section you're enrolled in. You're all the same here. You can attend a class, not attend class. All the work is going to be done in Brightspace or in the Connect system, whichever happens to be the case. And so this is my information here. These are all my office hours. This is not just unique to this course, but all my office hours here. The text is a Spiceland text, and we've been using it for quite a while in intermediate accounting, and so that's the text you should have. There's an e-text version, probably, which most of you are going to have. Occasionally, people will want the physical text, and I kind of get that in a lot of ways. A lot of people want physical text. Just to kind of have it. And once you have it forever. The e-text kind of goes away at some point, but you can mark it up, make notes and highlight whatever. If you want that, you can get it, but you've got to go do that on your own. The default setting here is for the e-text for this particular course, and so and you can link over to that from there. Has anybody been in the text this morning yet? Has been in the text yet? Okay. Well, if you haven't, then take a look at it and kind of go from there. And I'm not going to go through line by line the syllabus because I know you can read, and we are kind of pressed for time because this is a busy course and we're going to move along. But I do want to sort of highlight some of the things that we're going to be talking about here. So number one, the course description, we're going to be talking about intermediate accounting concepts, principles, and practices, and talking about reporting theory. So the prereq for this course is Accounting 1135, Accounting Applications, which gets into the debit credit methodology as to recording economic events and transactions. And so that's if you haven't had that yet, then I don't know how you slip through here to get into the course, but you want to make sure that you've had that. 2110 is sort of the entry point for this. Most of the students taking this course, I think, are CPA prep students who've done other things and want to take the CPA exam at some point. I know that the CPA exam requires lots of credit hours in order to sort of sit for it, but we do have a number of students who've done other things and have come back to accounting, and I'm one of them. I was an econ major as an undergraduate, and I kind of circle back to accounting because I love accounting. So we're going to talk about what GAAP is. Generally accepted accounting principles. We'll talk about GAAP a lot here and how GAAP rules apply to certain events that we're going to be talking about. How do we apply GAAP to certain transactions? Okay, and so this is really what is important here. Intermediate 1, intermediate 2 sort of flow together in a lot of ways, and some of the things that we would typically address in one course may be interchangeable with another course, and so occasionally we have students who take intermediate at one point at one place and come here and maybe have sort of a replication. Well, it's what we're trying to do here really is to try to introduce students to the GAAP accounting. And that is, what are the GAAP rules that apply to recording transactions and ultimately to report to financial standard users who are external users. That's really what the goal is of financial accounting, is to report to external users. And we apply certain techniques and methods and rules, frankly, that apply. And we'll talk a bit about this idea of rules versus principles as we talk about GAAP versus the international standards. So I'm not going to go line by line through this, but I do want to talk about, because obviously you can print off the syllabus or whatever. Oh, and by the way, the schedule itself, and I'll get to it here in a second, it may be a bit flexible. We may have to change some due dates around. I'll never move up a due date. It'll always be further back if we have to defer it for whatever reason. I think we only have one holiday this course. I think it's Thanksgiving, so that's kind of good. So there are some sections which we have a number of different holidays, and it's a little bit challenging and whatnot, but I think in this case we're in pretty good shape. There are some orientation activities. These are easy peasy, just kind of knock them out and get them done. There are 1,500 points possible in the course. We have some discussion activities, which are about 10% of the course, and those are easy. I'll talk more about discussion activities as we get closer. And then we have some quizzes in Connect and homework in Connect. And if you have not gotten into the Connect system yet, please do so. And let me know if you have any problems, because it seems like we do have some challenges occasionally with students being able to log into Connect. Connect is the companion site to the textbook publisher of McGraw-Hill. And this is the way we link into Connect. We link into that, and we do the homework and quizzes from there. So a lot of the work you're going to be doing on a weekly basis is going to be done in Connect. So I don't know if anybody's familiar with the Connect system. It's simply a companion site to the McGraw-Hill textbook itself, which is itself accessible there as well. We're going to have some exams in the course and a final exam, so 1,500 points possible, and that's the breakdown of points there. Okay, so for this week, it's not really all that challenging. We're going to sort of ease you in to this particular week. The accounting department here at C&M mandates that there are no late submissions and or makeups, and this is a pretty firm rule. Obviously, there may be some weird things that happen if you get abducted by aliens or whatever. I mean, it's going to be a pretty good story for us to kind of go along with that. But and the reason why is very simple. It's not because we're being hardcore Nazis. It's because of the fact that you've got to kind of keep up, and you can't fall behind. This is just not a course you can fall behind in. It really is not. When I took intermediate accounting way back in the day, it was sort of advised to us that we take something very simple along with it, because it was all 6 credits crammed into one semester, which is really tough, and it's challenging, but it's fun, and it's something that it's interesting. And if you're interested in accounting, and interested in financial reporting, and interested in a career potential in accounting, this is really the place to be. And we're going to try to present it in a way that is very useful and meaningful, and hopefully one that is useful to you in your future career. Okay, so I'm not going to go line by line through the syllabus, because I want to sort of get into the content here, but I do want to sort of point out on the schedule itself. So the syllabus is posted. You can go ahead and print it off for yourself. By the way, the Attend Anywhere modality has this as A1 and AO2. And really, it makes no difference. You can come to class every day. You can not come to class. It's up to you. It really is. I like it when students come to class, but it doesn't really bother me when they don't, because I'm recording all of this, and it's going to get posted in YouTube probably later in the day, something like that. But you have the option to do whatever it is you want to do. So there are 2 sections you can sign up for, but it's really, you're all really the same. And so everyone's going to be faced with the same sort of, activities and due dates and whatnot. So for this week, we're going to talk, all we're doing is orienting to the class. There's some orientation assignments. Just kind of go into those and do them. Very simple, very easy. Connecting to Connect, no pun intended, connecting to Connect. Give me a brief introduction. Don't go crazy. I mean, unless you want to, I guess. And go from there. But we're going to talk about chapter 1 today, and we have a smart book quiz and homework that are due on Sunday for this particular chapter. So this is why I didn't really want to spend a lot of time talking about this, because I know nobody here is a new college student. You're all at least seasoned to some extent. So we're going to get into chapter 1 a little bit. I'll talk about what that's about. I'm definitely not going to finish getting through chapter 1 today, but I'll go as far as I can. Next week, we're going to talk about chapter 2, which really gets us into the heart. Now, chapter 1 is really fairly straightforward. There's really nothing very technical. There's no journal entries. There's no statement preps. There's nothing really too complicated. We are going to sort of talk about an overview and what the accounting environment is all about, and where the state of accounting is. And for those of us who sort of keep track of these things, we're more or less in tune with what's happening in the accounting world right now. It changes. it changes a lot, and accounting rules changes, and accounting rules change, and so as a result of that, we have to kind of keep abreast of that. So we're going to talk a little bit about that and give a sort of broad overview. When we come back, probably on Tuesday, we'll get into the review of the accounting process, which is basically how we reconcile accounts, all the transactions and events that happen to prepare financial statements, and then we're going to get into the balance sheet. And one of the things about intermediate accounting that I think is sort of my own particular perspective is it's sort of a walk around the financial statements. It's sort of a deep dive, more than what you've had before in Accounting 2110, which is Introduction to Financial Accounting here, or accounting applications, or the equivalent wherever you took it. And it's sort of a deep dive in the balance sheet, income statement, and the statement of cash flows. We're not really going to get into the retained earnings statement here in this course. I think we roll that into Intermediate 2. But it's sort of talking about how we get to these areas where we are preparing, number one, the balance sheet and what goes into that, and the income statement. Now, the balance sheet and income statement have this unique relationship where they sort of interact with each other, and they're far and away the most two important financial statements of the four statements that are prepared. That is balance sheet, income statement, statement of cash flows, statement of retained earnings. The balance sheet and income statement are the two most important. And I don't want to really even open the argument as to which is most important of the two, balance sheet or income statement. It's kind of like a bunch of accountants slugging it out, and it doesn't really matter because they're both sort of tied in with one another. I think most accountants that I've known view the balance sheet as the most important, but it doesn't really matter at the end of the day because it's a personal opinion. We have some exams coming up. We're going to talk about revenue recognition. We're also going to talk a bit about expense recognition, but mostly revenue recognition. This really has to do with how we are recording revenue that's earned. Now, in GAAP accounting is based upon the system of accrual accounting, where things are recorded as they're earned, not when the cash is received. So this is what differentiates accrual accounting from cash basis accounting. So revenue recognition is a pretty important piece of this, and we're going to talk about that. We'll go back to the balance sheet, talking about cash receivables and inventories and property, plant, and equipment. So there's a pretty big emphasis on the balance sheet here in this particular course, right? So we'll talk about all these measurement areas here. We will talk about the income statement, however, and how important the income statement is. I'm sorry, the balance sheet. The balance sheet, current liabilities, and contingency, shareholders' equity. So realize there's a big emphasis in this course as to the balance sheet and what it's about. The balance sheet, if you're sort of Googling it, it's sometimes called the statement of financial condition, statement of financial position, whatever. There's a big emphasis here. But the thing about it is we have to be aware that there's an articulation, which is the term of art here, that says that we are moving between the balance sheet and income statement because they work together. Okay, if we have net income, we're going to do what with it? Maybe we pay out some in dividends, but we also are going to sort of capitalize it and increase shareholders' equity. So there's the connection between the income statement and the balance sheet that is very important. Okay, so in terms of the activities, you can kind of look it over, and if you have questions individually, get with me. My office hours are posted on the Brightspace site, and the syllabus itself has all my office hours because the business school requires we post all our office hours. And I'm going to be here. I'm here every day, so I have nowhere else to be. So just feel free to get with me if you have questions and whatnot. And if you want, the office hours are going to be both physically is here as well as in Zoom if you want to do that. So a number of our students are not physically going to be here for whatever reason because they're working or whatever the case might be. And if you want to do a Zoom call with me, I can do that. And even if it's outside my regular office hours, I mean, I've been known to meet students at really any time that is sort of sensible, and I'm more than happy to do that. And there's no problem with that at all. Okay. All right. Any questions so far about what we're doing here? Any questions about the text, the Spiceland text, and how to get to it or the connect? Occasionally, it seems like we have difficulty logging into the Connect system, and if you do, then get with me, and we'll try to figure it out. We can figure that out and kind of get there. Okay. All right, so let's get into it. So if you have no questions, and again, if you have individual questions, you can always get with me. It's no problem. But I do want to get into a bit of chapter one and talk about what's going on here with this sort of overall picture of what intermediate accounting is. So again, as I said at the outset, intermediate accounting to me is the entry point to the profession if you want to be an accountant. And I know that when I was an undergraduate finance majors, which is what I was at the time, also to take intermediate accounting. And so accounting and finance majors were the only people who took it, right? And it was a very tough course, and it was stressed as that. We'll try to make it as straightforward as we possibly can. I do emphasize the fact that there is a lot of reading and working at problems that's going to be required on your part. That's just kind of the way it is. There's no substitute for it, and I don't want to lead you astray in telling you that's not the case, because it really is. So I'm going to kind of start with the PowerPoint package, and it's available to you. You might think, well, okay, why are we doing this? Because why do I need you if all you're going to do is follow the PowerPoint slides? Well, I do make my adjustments and changes to it. Probably not so much in this particular area because this is pretty straightforward. The good news is this particular week is going to be, I think, not particularly complicated and really not very technical in the sense that we're only talking about some of the outlines of what's going on. But it really sort of serves to document the structure of accounting and what it really is about. Now, remember, when we talk about accounting, and we're talking about business accounting, we're not talking about necessarily governmental accounting. There are government accounting courses out there if you're interested in that. We're talking about primarily corporate financial accounting. And there are really two main branches: financial accounting and managerial accounting. Managerial accounting then has a subset called cost accounting and whatnot. But financial accounting is really the area that we are probably most familiar with, because it's really the starting point for most business students as an entry into business courses, frankly. The first dean I worked for way back in the day said that there are two cornerstones of business education, business school education, that is accounting and economics. And accounting is one of those structural issues, and it's really an important topic. So we'll talk about the environmental structure and what is the theoretical structure. And we talk about, and by the way, let me just say one thing about intermediate accounting. So we say we have introductory accounting in 2110. If you took it here, we have intermediate accounting here. And then what comes next? Intermediate sort of suggests there's something next. And advanced accounting is maybe more graduate level, maybe more senior level if you are going to university and whatnot. And it's more dealing with things like accounting theory or very specific topics, particularly involving international accounting. And that's an area we're going to touch a little bit on today. And if not today, on Thursday for sure. We'll talk about how important international standards are in relation to where we are here. So I'm going to kind of use this as a template. And by the way, the reason I use this is because of the fact that I want to make sure we cover all the topics that are important. It is a lot of the students who take this course are CPA prep students, prepping for the CPA exam, okay? And we'll make sure we have all the topics you need to understand in order to go here to accounting intermediate 2, in order to ultimately sit for the CPA exam if you want to go in that direction, okay? I no longer really practice, and I'm more an academic accountant at this point. So, but I'm pretty much, I think, in tune with what's going on with what the requirements are. So let's talk about what's going on here with regard to just chapter 1, and we'll talk about some of the overview. Some of this you may have seen before, and it's not particularly critical, is the idea of the important role of accounting. It provides useful information to produce goods, foster prosperous society, whatever. Okay, but here's the thing I'm going to give. Here's the primary focus, and it's external users. The underlying external is really important here. And by the way, I know a lot of courses, we sort of skip the first day and kind of give us a little bit out and whatnot. Well, we got to kind of move here because we got a lot to do in this course. And so the primary focus is external users. Now, remember, when we talked about the two branches of accounting, financial accounting deals with reporting to external users. Who are those external users? Investors, and all the actors who are involved in investing in a stock of corporations. Remember, and this is something we even talked about back in 2110, is the idea that the focus here is on publicly traded corporations. That is, corporations whose stock trades publicly, as anybody can buy it, and as a result, they have to comply with certain rules that we call the GAAP rules. And so, but the users are investors, investment firms, investors themselves, creditors who are lenders, right, and other external users. Other external users would be like regulators, foreign users, labor unions potentially if they're trying to file some sort of action against the firm itself. And so these are all users of financial statement information, which is why we sort of standardize this. And standardization has been a goal for a very, very long time. And we're getting very, very much closer to standardization where all firms can be compared against one another. And that's really, comparability is one of the principles we'll talk about. So investors and creditors. So I was a banker for a lot of years, 18 years. I was in banking, and I was a user of financial statements. And all the time, I mean, starting from really day one, well, maybe not day one, maybe day two, people would bring the financial statements. I would spread them, throw them on a spreadsheet, and do ratio analysis and compare them, and then hand them out to my loan officer, whom I worked for, and I was part of the creditor function. Then not too long after that, I became a loan officer myself, and I had people spreading these statements and preparing them for me. And the thing about it is, how do you make good decisions if you're an external user, if you're external to the company itself? How do you make good decisions unless you can rely upon some sort of standards themselves? And that's really what the heart of financial accounting is to sort of standardize the presentation of financial information, good or bad, whatever it happens to be, right? And by the way, bad news is not always fatal. I mean, we just need to understand what the heck's going on. So I'm very familiar as a user of financial statements with what they look like. And the external users are unions and insurers and all that. So, and the financial information is a key component of that. So, why do we use it? It's in order to determine what to do about it, right? So if I'm an investor in a company, I'm putting my own money into it or my client's money into it, I want to know what the heck's going on with this company. Now, this is not something to be taken for granted, because we had, and we'll talk a bit about this, I think, a bit as we get going. But back in 2002, we had a number of accounting scandals, and it was really disheartening for those of us who were sort of trained in this area. But particularly Enron was the sort of poster child for really, really bad accounting and really misapplication of accounting principles, and it led to a lot of loss of money, particularly not just investors and creditors. Maybe you can say we can care less about them, but what about employees of the company who had their life savings? And I mean, it's invested in the company itself. So these are not small stakes. These are not small stakes. These are all big stakes that we're talking about here. So in talking about what we expect to get out of it is really important. And then also before supplying capital to businesses. And so without some sort of standardized system, it really doesn't make sense. By the way, I was telling class not long ago that I had come across a set of financial statements from the 1920s, I think it was. And I want to make sure we're broadcasting here. So, okay. Oh, yes. I don't know what it is. Sorry about that. I just want to make sure. Jeez. Okay, I think it's broadcast. I don't know what happened. I don't know what that is, guys. Oh my God, you're kidding me. Okay. All right. All right. Hopefully we have no reverb. I don't know what this. Okay. I don't know what this is. This guy was weird. So, sorry about that. Okay. Oh, sorry about that, guys. I don't know. Do you have an idea what's going on?
If you exit out of the one that's in your browser, the feedback loop should stop.
This browser?
The one that's in Google Chrome. So you have one that's broadcasting through Zoom, and then you have one you're pulled up as a participant. Yeah, try exiting out of that tab. The Zoom tab that's up there. So go to the top of the page.
Can you come show me? I've never seen this before. So.
Try leaving here.
Okay. But now the sessions are.
No, you should be going through. Yeah.
You're still on Zoom.
So basically, you had two that were going. You had the teacher version, and then you were logged in as a student. I just exited you out of the one where
Yeah, so we're still recording.
Yes, should be recording.
You definitely take me out of
Oh, you're good.
Brightspace.
I was just showing that it is still going on here.
All right, good. All right, thank you.
Yep.
All right, thank you. I appreciate that. So, all right, so we're still alive here. So, all right, so this is so we're still going on here with what's happening. So, wait, are we still live in Zoom?
It should be.
Yeah.
Yes. Okay, it looks like okay. Oops.
Yep. So it says you're recording the meeting. So.
Okay, great. All right. Apologize for that, guys. I am not a tech guru. I'm not, right? but anyway, so this is the so kind of back to where we sort of left off here. We're talking about who are the users, and the users of financial statements. There are really many. I mean, I guess the two main categories are investors, that is, equity investors, and creditors who are debt investors. That's really what we're really talking about here, is users of financial statements, and they rely upon the accuracy and the ethics, really, frankly, of the firms that produce this information in order to guide decisions. And it's really important. And we're going to talk a lot about ethics. We have an ethics case coming up a little bit later in the semester. I think it's week 12, I think. So it's a bit that's available now, so you can kind of take a look at it. And probably in years past, it wasn't that big of an issue, but in 2002, it was really a shock to the system where we have some really bad accounting going on, and there's no other way around it. I mean, we just have to kind of own it. So those accounts, it was kind of bad. So let's talk about what financial accounting is. So remember, we have two different branches of financial accounting, which, by the way, does not necessarily parallel the occupational path of accountants. For those who are interested in auditing, financial accounting is a great way to go if you like auditing, and there's a lot of money to be made in auditing. And there's also taxation, which is my area of expertise, frankly. I don't practice so much anymore. I'm probably going to do a little bit of work just with some clients I've got this year, but I am probably not going to do very much. But tax and audit are sort of the occupational paths. In terms of the branches of accounting, financial accounting is one of those. And we're talking about the balance sheet, income statement, statement of cash flow, statement of shareholders' equity. And we're talking about this idea of how we present information to external users, and in a format that is understandable and is comparable. And we're going to apply some concepts and principles that really apply to this particular area here. And so when we talk about the providers, we're talking about primarily profit-oriented companies. Not-for-profits, yes, certainly. Not-for-profits, we're not going to talk very much about in this course. We're going to be talking about primarily about for-profit companies, primarily publicly traded companies. And in terms of households, well, they could be a user if they know how to use financial statement information and whatnot. But nonetheless, those are going to be there. Who are the users? Investors, creditors, employees, unions, customers. Government agencies a lot of times will use these. And by the way, my experience in finance is the idea that sometimes if you're a company that has a big contract with the government, they want an audited financial statement to make sure that you are capable of performing and have the ability to do, build whatever, 10 miles of roadway or whatever it is, right? So that's important. Okay. The investment credit decision. Why do investors encourage provide capital? Well, they want a return on their money, and shareholders receive cash from ownership shares or periodic dividends. We're going to talk a bit about this idea of how shareholders earn returns, and that is the idea they earn returns both in terms of dividends or not, and because some companies do not pay dividends, or an appreciation of the investment itself. And so obviously nobody buys a stock in a company expecting to lose money. And at least I don't think, unless there's some weird reason they have. People want to earn a positive return, and the returns are divided into two pieces. Number one, dividends, which is an ongoing stream of income, and capital appreciation, which is a rise in the amount of income. And we think of the technology companies, which pay very, very little dividends, have for a very long time paid almost no dividends. And people buy them, and you might think, why do they want to buy them? Well, they want to buy them because the ownership shares are going to go up in price. And by the way, nobody pays taxes on a rising share of stock until you sell it. So you can buy stock. If you bought Microsoft in 1985 and have never sold it, you probably have a gigantic gain that's never been taxed ever until you sell it. So
that's when you let somebody inherit it.
You pass it on to somebody else, inherit an IRA or whatever, right? So it's a beauty of the stock market. By the way, Warren Buffett has talked a lot about the idea that the beauty of this is the idea you buy stock and you just forget about it, and maybe not forget about it, but that's kind of his own saying. And it just kind of grows up. It goes up, and you never pay tax. There's no event. If it pays no dividend, there's no recordable event in terms of dividend, in terms of taxation. So it's kind of interesting thing. It's a unique feature, really, of our economy, and the idea you can buy equity in the company and never pay tax on it as it goes up. So the key variables here are the rate of return and the uncertainty of risk. Now, I've sort of highlighted these because these are elements of the investment decision itself. I'm focusing here really on what are the motivations of users of financial statements. And we're talking about primarily about investors. And that is, what rate of return do I expect to get? Well, first of all, think about this. How on earth do I know what rate of return I can expect to get unless I get good financial information? How do I get that? I need CPA firms to produce good financial statements so that I can judge for myself what the likelihood of profitability is going to be or not going to be, right? And it's up to the eye of the beholder as to what this means. But if we're all dealing with the same, we're all singing from the same hymnal, at least we can decide what's going on. We may have different ideas. We all have different ideas of what's going on. I may think the Chicago Bears are going to win the Super Bowl this year, right? You may think I'm insane, right? And I probably am insane, right? You may think the Seattle Seahawks are going to win the Super Bowl. I may think you're insane, right? So it doesn't really matter, but we're all dealing with the same facts. And the facts are really what inform this idea of rate of return and uncertainty of risk. Now, we'll talk a bit about risk. It's a complicated subject. We get into a lot in economics, the idea that things are not always as clear-cut as what they might seem, because things happen. And it's a risky world, and that's just part of the framework of this. By the way, intermediate accounting interfaces very well with finance. And it's kind of the world that I came out of, but it really relies heavily on the standardization and the accurate reporting of information, good or bad, good, bad, or ugly. We want to know what's going on with the company, right? All right. So when we talk about rate of return, let's just give a quick example here. So assume an investor provides a company with $10,000 cash by buying stock in the end of 2020 and receives $400 in dividends. All right. So the $400 in dividends is part of the numerator here. This is part of the rate of return. Rate of return expressed as a percentage. So we have dividends and we have share price appreciation divided by the initial investments. This is just 1 year, right? So, and the ownership has gone up by 10%. So there are two elements which we split up here. We have dividends, which is an income stream, okay? And we have share price appreciation, all of which are added together divided by the denominator, which is the original investment. It gives us 10%, okay? And these are two different pieces we need to understand these are two different spread out pieces. Not only from the taxation issue, which is another issue itself, but the idea that we have two different elements of return on investment. So investors want to get a return. Nobody buys the stock, at least unless they're out of their mind or whatever. Nobody buys the stock expecting it to go down. So we don't expect depreciation. It happens. Yes, it happens all the time. Unfortunately, I bought stock that has gone down. I've been lucky most of my stock has gone up, but I've had stock that's gone down. It happens. Dividends, which are mostly reliable, but not always. And so it's part of the return on investment. And we call expected rate of return expressed as a percentage. Now think about this. One of the things we should be very much aware of. Everywhere in accounting, finance, economics, we have three different means by which we understand variables. Those dollar figures, percentages, and numbers. Okay, and those are really the key elements that we have to understand. With dollar figures, percentages, and numbers, and those are really the only denominations that we have to deal with. Okay, but we have to understand that we're going to sort of moving in and out of these from time to time in order to understand what is really going on. So kind of be aware of that particular issue of rate of return, and that as investors are looking for rate of return. Okay, we know that. This is not some giant secret that investors want a higher return as opposed to a lower return. But how they base their decisions, and this is really where accounting is instrumental here, how do they make their decisions? They basically are using the same financial information that everyone else is. And the fact is that if people disagree on what those numbers mean, it just is a reflection of the fact that people disagree generally on a lot of things, right? So, but nonetheless, at least the goal of the accounting profession is to inform through accurate information. And that's really what GAAP accounting is really all about. So, all right, so in this case, quick check return. Creature, strange name, purchased $200,000 worth of Truman stock, received 4 quarterly dividends of $1,000 each, and sold it for $206,000. What is the rate of return? Well, let's go back to this. So we get dividends plus appreciation. So the dividends, he got $1,000 times 4 and $6,000, which is appreciation, right? So it's going to be, all right, 10,000 of appreciation. So as a result, 10,000 divided by 200,000 is going to be 5%. So that's his appreciation as regard to that. Right? Where the two pieces of this are income stream as well as capital appreciation. Okay. And this is not really a stock market course. It really is not, but it kind of gives the idea of how we separate out and we and view this idea of returns to shareholders. And I think in the last several decades, I think stock market has been going up and up and up and up and up. I remember, I'm probably the oldest person here. I may be twice as old as everybody here, but I remember having noticed my dad back in the early 80s when the stock market, and Dow Jones closed at $1,000 or 1,000 points. Today it's 46,000 points. And he thought, I never lived this long and I'd see 1,000 points, right? It's 46,000 points, right? And today, and so you kind of get the idea that stock prices do go up over time. But one of the elements that allow investors to feel confident is the idea of good financial reporting based upon standards that we have in this country tried a very long time to make rigid and enforceable, and we have government entities that would do that. We'll get to that here in a second. Okay. All right. Questions so far about anything that we've talked about? Okay, uncertainty. Well, uncertainty is sort of a factor here. This is it's probably a bigger question than what we're going to deal with here. A lot of what we're talking about here is not really what we're going to be getting into throughout the rest of this course, but uncertainty is certainly a principle, particularly in regards to how do we know what's going to happen. Well, we don't know, and if we knew the future, then everyone would be, getting to that particular future state, and it'll be fine. But we really don't know, right? All of us can walk out and get hit by a car today, right? I mean, it's not going to happen probably. The statistical odds are not good. They can happen, right? So uncertainty is a factor, and one of the things that I've done since I've sort of left the financial world and is starting working with a hedge fund that deals with futures and contracts, and we deal with a lot of uncertainty. We just don't know what the future is. We just don't know what's happening, and that's really the problem here. Is we don't know what's happening. However, I will say this: the more that we can create certainty by standardization, by following rules, the more we can be certain of what's going to happen. Yeah. I don't know if you also, there's sort of some sort of asteroid floating toward us, right? So you guys see this news story where there's some sort of powered event coming our way, and we don't know what it is. Well, that's the element of uncertainty that sort of flows into this. But we're talking about the idea of how we create certainty, and that is the idea of standardization of rules that allow us to at least lock into what we think is going to happen, right? Because if we don't have a good certainty, then no one's going to do anything at all. And that's really part of the problem. And is the idea that we need some sort of certainty as to what's happening, given the fact that there's never going to be perfect certainty, but we can improve certainty through rules that sort of define what the parameters are of the risks themselves. So the primary objective of financial accounting is to do what? It's to provide information that's useful for decision making, and it helps those outside investors and creditors, these are external users again, evaluate what's going on in terms of the amount, timing, as well as uncertainty. Now, the uncertainty picture is something that we will get to more if you maybe take further accounting courses or even microeconomic courses where we sort of put odds on what are the probabilities of certain things happening, but the amounts and timing and whatnot. So, and we're talking about primarily cash flows, okay? Cash flows. That's really what's going on here. And so that there's definitely an intersection between intermediate accounting and finance, in the sense that we're trying to time these cash flows both in and out, by the way, and so that we know what is essentially going on. Okay? All right. Questions about anything so far here? Okay. Let's talk about something which came up probably in 2110. I don't know if you got into it in accounting 1135, accounting applications, which is a prereq for this course, but the difference between cash and accrual basis accounting. It's kind of a thing, right? And I think that frankly, all the accounting courses I've taken over the years sort of minimize the sort of relevance and importance of cash basis accounting. But I kind of like cash basis accounting in a lot of ways. It's easier to do than accrual basis accounting. Having said that, what we're going to talk about in this course is accrual basis accounting. Accrual basis accounting is basically the idea we measure the receipt of revenues and expenses, not when money is transferred, but when the activities happen. And so we're trying to match up the incurring of expense with the earning of revenue whenever it's done, not when it's paid. And if you don't do this, then you're sort of moving and shifting things around to the point where it's not really important. Having said this, cash basis accounting makes a lot of sense, particularly for smaller companies that really don't have the ability to do accrual basis accounting. And a lot of small companies do that. And in the tax world that I come out of, a lot of companies, a lot of my clients over time have chosen cash basis because it's easier. And you simply latch in hook into the company's checking account and say, revenues coming in, revenues expenses, that's money coming in, money going out. The problem that we have, though, is in accrual basis accounting that we're going to have wild distortions in operating performance. And by the way, the term operating is almost always associated with the income statement, net income or net loss. So you're going to really distort it because, frankly, a lot of projects take a lot of time to build. And so as a result, you're earning revenue, you just haven't collected it yet, right? If you're building a submarine or an aircraft carrier or in Las Vegas or whatever, it takes a long time to earn that revenue. And sometimes the cash follows it, sometimes it doesn't. But as a result, accrual basis accounting is much more accurate. And it really allows for this idea of matching, which is this idea of matching the revenues and expenses for the particular period in which the activity is happening. Okay, so cash basis is used a lot by smaller companies, and particularly for tax purposes. And I think the IRS has long ago given up the fantasy of them trying to force every business, even very small businesses, to an accrual basis accounting system. I don't think a lot of small businesses are not set up to do that, right? And frankly, a lot of businesses are not really set up to understand what accrual accounting is, where we're recording revenues as they're earned and expenses as they're incurred. And by the way, that's a topic we're going to get to throughout this course. We're going to talk about revenue recognition and expense recognition, and how do we recognize revenue, how do we recognize expense. It's going to be based on the accrual basis, okay? So GAAP accounting is based upon accrual basis. There is no option. There is no option for firms whose shares trade publicly to deal with cash basis, except for the fact that there are some partnerships out there that do cash basis accounting, and I was an investor in a couple of them, and so there are some exceptions. However, most of the time, we should be thinking about GAAP accounting as being associated with accrual basis accounting. So, as an example here, just to sort of give the comparison of cash versus accrual. So Carter Company paid $60,000 for 3 years rent at the beginning of year one. So they prepaid rent, right? So for whatever reason, okay? And so they prepaid rent, and as a result, what happens here? Well, on a cash basis example, right? They'll lose money in the first year, and second year they make money, and at the end of the 3-year period, they make $60,000 in revenue, assuming all else remaining equal, right? The only thing that's different between the two examples we're going to show here is cash versus accrual is the fact that cash basis is based on flows of money. Okay, if we compare it to the accrual basis example here, same facts in terms of revenues and expenses, where you've got a different example where we spread the rent out over 3 years because we're incurring the rent over 3 years. We're incurring the rent over 3 years, even if we paid it. Now, by the way, we'd still pay it, and it doesn't make any difference. But we're not going to incur the expense. This is an income statement. We're not going to incur the expense until we've actually incurred it, and that's what the accrual statement is based upon, even though we paid it ahead of time, right? But here we smooth out the financial information. At the end of the day, we have the same $60,000, but it's a little bit more smooth. In the case of the cash basis example, we have a huge loss in the first year because of the fact that we're recording a cash flows expense. We're not expensing it in the accrual example, we're simply accruing it, regardless of when the money's been paid. And this is really one of the examples of accrual basis versus cash basis, and how the cash basis really does sort of distort results. And I know the dollar figures here are fairly small for a public traded corporation, but you kind of get the idea that we smooth out things with an accrual basis example, and that's really what's essentially happening. Cash is a fairly volatile category of asset. It really is. In fact, a lot of companies, have a dedicated treasurer in public traded corporations to do nothing but manage cash, and it's because of the fact cash goes up and down, up and down. When I was doing my MBA years ago, I had a prof who was a corporate treasurer who said that cash was really unpredictable. I mean, come in and go out, come in and go out. And they had to really sort of smooth things out a little bit. And it was not always easy to do because of the fact that, there was cyclicality throughout the year. Sometimes people would pay faster or slower, whatever the case might be. And so that's essentially why cash is difficult and why cash is not acceptable for GAAP purposes. And so in our course description, we talk a lot about GAAP and what GAAP is all about. GAAP is really based on an accrual basis system in which we are trying to spread things out in order to make sense of what's economically happening, not where the money is. So, and we say, and it's something we've said for a long time, don't follow the money, right? And I know that there's a saying in our society, follow the money. We're saying don't follow the money. We're saying don't follow the money because we're saying follow the activity and record the activity, not the money, okay? That's really what's going on with accrual accounting. So in this case, we have a quick question. Which of the following is not an advantage of accrual accounting? Number one, spreads out the influence of one-time events, okay? B, highlights cash effects of operations. C, captures long-term performance. D, recognizes assets and liabilities with receivables and payables. Well, we're not quite there yet in this course in terms of that, but we'll get to that. But the correct answer is B, highlights the cash effects of operations, right? And that is the idea that we are going to account for cash, whether we're using accrual or cash basis accounting. It's going to show, and over long periods of time, they're going to sort of wash themselves out. But the distortions that come from operating information, the income statement are going to be magnified with use of cash basis accounting, simply because of the fact that people pay, don't pay, whatever, on a timely basis, and it really distorts operations. So what accrual accounting really seeks to do is sort of match economic activities with economic expenses. Okay. All right. So let's talk about. So any questions before we got about 10 minutes left, and I want to sort of get through this. And I want to hopefully I'll finish this introductory bit on Thursday, so next week we come back, we can start to get into some sort of the meat of the course itself. So let's talk about GAAP and what it's about. So generally accepted accounting principles, hopefully this term is not new to you after 2110 and 1135. So GAAP is a dynamic set of broad and specific guidelines that companies should follow. And we say they should follow, they will follow. And if they don't follow, they've got a serious problem. And they facilitate decision-making by investors by allowing them to compare. Comparability is one of those concepts we're going to get to as a sort of set of ethical guidelines, principles, concepts that sort of align themselves to GAAP accounting, and we'll talk about what GAAP is really all about. Okay, so here's the standard setting hierarchy. All this is your text. I know this is in your book. I'm not unaware of that, but the U.S. Congress is probably the ultimate authority here. You might wonder, where's the president? Well, the president works with the Congress to develop rules. Any law that Congress passes, the Congress is also, any law the Congress passes, the president is also going to sign off on. But the Congress is ultimately our elected officials, the ultimate authority. But the SEC, the Securities and Exchange Commission, is really the main body that ultimately decides what's going on. But on a day-to-day basis, though, we have this progression of, and this is kind of a weird slide here because it kind of has a sort of hierarchical, vertical, and a sort of historical issue here. But it's the FASB that really is the agency now. It's a nonprofit, a non-governmental agency that really sort of controls what's going on with financial accounting standards. So FASB is really the third creation of regulatory bodies in the accounting profession, which is mostly self-regulated. Up until 2002, it was almost exclusively self-regulated, and the accounting profession was notorious, well, not notorious, but was well known for policing itself. But think about this: if you go back to the Great Depression, there was the Committee on Accounting Principles, which then became the Accounting Principles Board, which became the Financial Accounting Standards Board. But think about this: we go back in time here, and you can read this in your text for yourself. I was looking at some financial statements in the 1920s, back when I was doing my doctoral work in accounting, and I came across an income statement that was produced by a publicly traded corporation. I think it was Goodyear Tire, I think it was, 1925, 3, whatever it was. And there was no cost of goods sold on the income statement. It's like, what? And there were no, that seems to be like a pretty big omission. No cost of goods sold. And they got to a net income figure, but the numbers didn't match. It was a mess. And you could see why there was a need for accurate financial reporting that conformed to certain standards. And so, in other words, when GAAP accounting standards have been developed, we said that GAAP is a rules-based standard. Remember, that's a rules-based standard. And the reason why is primarily because the U.S. was way ahead of the rest of the world in terms of industrialization and in terms of the financial markets that allowed capital to flow into companies. And there was, and because of the fact that it was the Wild West, the rules were crazy. An income statement, no cost of goods sold. You got out of your mind. It's ridiculous, right? And so we needed in this country to develop rules, and so GAAP standards are based on rule standards. I say this because why? Because we're going to compare it to international standards, which are based more on what we call principles-based standards, which are the idea of, okay, yeah, you got rules. Those rules are nice. That's fine. But what about the evolving and changing landscape of the world in which we need to be a little bit more flexible? So This is an area of debate. It's been going on for a very long time. It's not anywhere near resolved at this point, but GAP is a rules-based standard, and how it's changing. And we'll talk about this convergence between GAP and the rest of the world. And in 2110, if you took 2110 here, we had a great graphic. I don't seem to have it, but it talked about how GAP standards are basically a U.S. set of standards, and there's everyone else in the rest of the world. I think Japan is an outlier. They kind of do their own thing. But the US and Japan are sort of absent from the rest of the world, which has adopted different set of standards, which are not really as rigid and rules-based as what ours are. And we're going to talk about it. We're almost out of time today, but we're going to get to it probably on Thursday and talk about what's going on. The point I want to make, though, is the idea that rules were necessary because they're the Wild West. I mean, you can report any kind of figure you want or omit figures. It was just a mess. And if you look back, there are people who call accounting historians. I know it sounds like a really small section of people who make their living, but they digging up old financial statements where it is just not good. It is not pretty. And so, having been one who's seen some of these, it's interesting. So think about that. The idea of what is a rules-based standard. So here's the hierarchy of regulation. The SEC was created in 1933 in the wake of the Great Depression. And if you take macroeconomics, you can certainly, learn what the causes of the Great Depression were. But nonetheless, coming out of the Great Depression, the SEC was created as a measure. President Kennedy's father was the head of the SEC the first time. So the Securities Act, basically they said, we're going to regulate the offering of securities, both stocks and bonds, primarily stocks though. And the Securities Exchange Act basically regulated how the markets themselves work, how we are trading securities, and what are the reporting requirements. Now, obviously, the accounting standards were being developed over time, and they're not quite there yet, as we talked about the progression of these, but nonetheless, those were some of the early efforts. And so the progression of these, I don't want to spend a lot of time on this because, you can read this for yourself, but there was something called the Committee on Accounting Procedures, 1938. It was really the very first effort to try to make sort of standardization of accounting rules for publicly traded corporations. It was a worthwhile effort, no question about it. It was a committee of what was called the American Institute of Accountants. Today, we're part of what we call the AICPA, but that was the original entity, accountants. And by the way, accountants have been around for a very long time. We've had different names over time, but nonetheless, they've been around for a long time. By the way, those of us in tax enrolled agents have been around since 1865 or something, so a very long time. So, so some of these bodies have been around a long time, but have been subject to different sorts of regulation for a long time. So it's a national organization to certify professional accountants. A good effort, no question about it, right? And it was later renamed, of course, the AICPA, which is the name today for anybody who wants to enter the CPA profession. The exam itself is written by the AICPA, if you take a CPA exam, right? And that's the body that exists today. The Accounting Principles Board was sort of replaced this a little bit, and it itself was replaced by what's called the FASB, Financial Accounting Standards Board, which is still in existence today. The FASB is a nonprofit entity, which, for the most part, for the longest period of time, at least I think most of our lifetimes, and most of our parents' lifetimes, really was the standard-setting body for financial accounting standards. We're going to talk a lot about this, and when we talk about FASB, we're talking about the entity that sort of promulgates the rules of accounting. Yes, the SEC, the government entity that really regulates financial markets in the country, ultimately has authority, and even beyond that, the Congress, the president, but really on a day-to-day basis, FASB is really what's going on. And there's 7 full-time members. It's considered a very prestigious job, usually composed of professional accountants, but not only accountants. It's composed of different members of mostly in the corporate world, and they give up their jobs. They have to give up their jobs to do this in their full time, and it's a very prestigious entity. And the Financial Accounting Foundation is the governing body. And we'll talk probably on Thursday, because we're almost out of time, about there's sort of parallel to this in the international standards as well and whatnot. But the EITF was created to deal with issues that are emerging. And I really want to talk a bit more about this. I don't have much time today. This emerging issues task force, where if things come up that nobody anticipated, it's new. Big one today is crypto. When crypto just kind of came on, with Bitcoin, Ethereum, and whatnot, and how do we deal with these particular accounting changes? And we need some sort of entity to sort of figure out what's going on with these things, whether it's crypto, whether it's cybersecurity, whether it's identity theft, whatever the case might be. Emerging Issues Task Force was created in order to deal with these. And this is a standing body that kind of deals with these particular issues. And then finally, because we're almost out of time, is the GASB, the Governmental Accounting Standards Board. And I don't teach government accounting at all. I do not feel I'm qualified to do that, but it is out there. And a lot of people who deal with particularly auditing concerns, the government audits, will adhere to these GASB standards. So, all right, so that's really all I had today. So when we come back on Thursday, what I want to do, I want to sort of finish this up. I've got some room to work. I've got some things to do to cover this. And if you have questions about the week 1 activities, let me know. Please log into a Connect as soon as you can. Make sure you can get into it. There are occasionally access issues where people are not able to get into it. I want to make sure you are able to get to it. If you're not, we'll deal with it and go from there. So, okay. Any questions from me? Have a great rest of your week.
So what was that? This is a long time ago, so I don't know what you remember. It was the New Mexico parties. It was when Andy Drummond moved down.
Oh yeah.
So they're calling out patients' names back then. It was like before it hit, they called out a plug for alien. And some woman stood up in the lobby and said, "Shouldn't your ass be in jail?" I thought this was hilarious.
Oh, I remember those days.